Thank you, Omar. Thanks for joining us this morning. We have a great lineup here of panellists with deep expertise in different areas of our topic today, consumer data in the digital economy. And so what we're going to discuss with you, and we'd love to take your questions afterwards, are some of the key things we think are important and hopefully on your minds about having the open data. We are going to talk about what it actually is and how it will transform the way we work and live, how consumers and companies can prepare for this new open data era, the issues that still need to be addressed, and who we are thinking about as the inevitable sort of winners and losers out of the changes to open data. So I'm going to throw it to these guys who have already been introduced, but to each take a moment to tell us a little bit about their background and their interest in this topic.
Thanks, Renee. Hi everyone, I'm Anthony. One of the co-founders and CEO of Wisr. So Wisr is a purpose-led company with the goal to really reinvent what consumer lending can be in Australia. So we do that by focusing on a few things. One is really building a really strong financial wellness ecosystem to help Aussies access smarter, fairer credit and then manage that credit in a really positive way for themselves. We've been in the company for about 4 or 5 years now. We're ASX listed, got a market cap around about 300 million or so, and we're the fastest growing lender in Australia at the moment. So it's been a long 4 or 5 years to get here, but really feel like we're just at the beginning of what's possible for us to build in this space.
Danny Gilligan, CEO of Data Republic. Data Republic builds networked enterprise software to enable secure, private and governed data sharing between organisations. So we really see this shift to this data economy, which is all of the new ideas, new applications, new products, new services, new experiences that can be created by the movement in collaboration and sharing of data across different elements of the economy is one of the most transformational things that's going to happen over the next decade. You know, we think that data is the single biggest lever for microeconomic and social reform, if only it wasn't so stuck and so poorly utilised today. And so our objective is to build a suite of tools that actually enable enterprises to kind of claim their stake in this new data economy, and particularly to take their consumers on that journey with them in an ethical way.
Hi, I'm Graham Dickens, and I don't like microphones. I've been at Judo since the very beginning, when it was initially Judo Capital, and worked through the process of moving it into being Judo Bank. As you probably are aware, Judo is a small medium enterprise business lender and also is doing term deposits. It has been growing since about 4 years. We stepped into the space about 3 years ago, and I'm still very proud to say became a bank fully last year. So very interesting journey. For myself, I come from multiple industries, smart cities, local government, all the way across to financial services, and I've seen open data approaches across all worldwide. Everything from Open 311 through to the stuff we're seeing occurring in Australia now. And I think data is the lifeblood of our future.
Great, thanks, Graham. Now, we've seen quite a lot in the media just over the last couple of days about open data and what it means to businesses, but I'm kind of interested in hearing from the panel about what they think that's going to mean for society. What's the benefits that we are going to see as consumers and other audiences in society from having open data?
You're looking at me, so I guess I'll go first. What changes we're going to see? I mean, I think some big claims by my colleagues here around the potential transformation ability of data, and I think some of that's right. I think the vision is actually right. I think it's the way data gets used and consumed and turned to benefit. I think is one of the things that this open data kind of regime really enables. And what I mean by that is that the data's always been, and there's no new data really getting created here. Right? So the data's already there, but no one knows what to do with it. And the people that have the data, the companies, have too much of it, and it's so big, their data sets, they become almost not useful in any way, shape or form. And so great examples are, would be, the banks. The banks in Australia have a lot of this kind of data that we're thinking about at the moment. They've been effective in some ways using that data, and they've done some really great things internally with that data. And I think they've struggled at scale as well. And they say that openly. It's not me talking out of turn about them. They will talk about the challenges they have with this amount of data. So I think the big thing that transforms, though, is that when you put the data into the hand of an individual, it becomes much more granular and much more personalised. So what I can do with my data about me, because all of that data is relevant to me, what I can do with it becomes really powerful if you give me tools to actually look at my own data in really interesting ways, which a bank or a big conglomerate just isn't interested in getting down to that level of personalisation or scale, or just can't because they've just got too much of it. So they're only looking at what do we do with big data sets? What do big data sets tell us about ways we can improve our business, which is where they typically drive for. I think what's exciting about this world that we're about to enter into is it allows companies to really focus on, can we build stuff that helps individuals make their own lives better? That doesn't necessarily drive our bottom line, doesn't improve our business economics. It's not about how can we use this data to make us make more money. It's actually about saying, how do we give tools and access to this data to the individual so they can do cool things for themselves? And that's a pretty big shift in where this data kind of ends up sitting.
Okay, thanks. Do you have anything to add to that?
Yeah, I mean, I'll go macro and micro. So, how big is this opportunity? I mean, you've probably seen some of the research from people like McKinsey who say that, fully open data economy across every vertical will create between $3 and $5 trillion of new value per annum. And, those can be throwaway statements. But another way to get a lens on that, if you look at the market cap of Google and Facebook, some $1.5+ trillion. The two observed data signals they have is search intent and social interaction. Neither of those data signals are anywhere near as powerful as the data signals that sit inside domestic businesses and economies. Banks, airlines, telcos, retailers, insurers, etc. So if you were to try to imagine what would happen if you could connect up all of those fragmented data assets in a local economy and then connect them across economies, the size and impact of that asset far exceeds by a factor what's sitting inside what I'd say is the relatively weaker signals of those two large companies today. But at a micro level, people really, I think it helps them understand what are we talking about here when you bring it to life in an actual use case. And a couple of the favourite ones that we've seen happen on our platform is the state government bringing together immunisation data de-identified at a micro geographic level with bank transaction data. The state government has a free immunisation program, fleets of vehicles that drive around, put out a sign and say, get your shots here. By bringing that data together with transactional footprint data, they could determine where people were at which time of day in kind of an abstract sense. And within 36 hours of bringing that data together, create a new routing algorithm for that fleet, which they model would increase immunisation rates by 10%. I don't know of anywhere other than data where you can get that kind of an impact that efficiently on major kind of social issues. We've seen similar use cases on mental health in teenagers. We've seen similar use cases bringing together supermarket data around over-the-counter medication, tobacco, alcohol with prescription mental health medication to see for the first time how people self-medicate in the most holistic way. We're sitting at the moment trying to help one of the first cross-border data shares occur under the Singapore-Australia Digital Economy Agreement. And it's an airline and a tourism authority, and the airline knows how many passengers deplane at Sydney Airport every year, but has no idea what happens after that. The tourism authority knows what happens. Right. If you can bring those two insights together, then the airline can market journeys and not flights. Mm-hmm. And that means that consumers actually get the experiences that they want brought to them, the airline gets more sales, and the country gets more tourists. Right. It's one of those kind of classic win-wins, but cross-border data sharing doesn't happen today because it's too hard. Yeah. The regulatory environment doesn't exist to support it. So if you think about even that use case, that applies to every tourism authority and every airline in the world, and every consumer who travels. So there's literally an unlimited number of use cases yet to be discovered through what I would call a truly liquid data economy built on a framework of good governance.
Yeah. And actually that brings us to the next thing I was keen to talk about, which is the regulation around it. And there's been comments from FinTech Australia talking about it being quite a fragmented approach to data regulation, that it's creating quite a few issues around sort of competing priorities and compliance burdens. It does seem like things are moving at different speeds depending on where you're sitting. So I'm really interested to hear sort of what you think about the regulation that's sitting around this, and if we're ready, for the open data to go ahead, that pushed it out to July, but what that timing's going to look like. Grant, you happy to talk about that, or Danny?
Yeah. Having been involved in various other open data policies, processes throughout the world, it's a case of we need to get moving because we really don't know what it will look like once we get into the space. Any kind of open data economy is really like a singularity for us because we really don't know what it will look like when we get there. So getting all these policies and all of these standards and all these regulations ready is great for us, but it's the fact of they will grow as we go. Well, my personal experience says that. We need something to base on, and what we have is fundamentally good enough for us to get going. And having the capabilities to actually achieve that regulation, we have those as a country, as an international body, as the world, we're able to do that. And organizationally, organizations just need to step up and actually meet those things. So I think we're ready to go. We're just going to have to be aware that things will change as we progress.
Makes sense.
Yeah, I think so. There's a couple of different questions kind of wrapped in there. I think the regulation stuff is progressing at the pace at which regulations progress. And no one in this room is going to be shocked to hear that the incumbents will try and slow it down at every step of the way, even though conceptually they might have some of the most to gain, but they're just quite rightly scared and protective of their incumbency. And so we don't need a Royal Commission into banking to tell us that they're going to try and hold that market share and position for as long as they can and push competition down the path for as long as they can. That's their right to kind of do that and protect their interests, and so they should. And if any of us were in those businesses running, we would do the same thing. The burden then comes on the rest of us to kind of challenge that speed and pace to make sure that the customers and as Hayne did talk about, which is the expectations from the community need to be met in this sector across all sectors, not just in banking but right across the whole data. So community expectations, I think, need to be met, and that includes the right types of regulations and safety and control, balanced against the need for progression. And they are often at conflict, and there's lots of examples across industry. Where you look at, Uber's always a classic example of, regulation wasn't there, didn't catch up. The consumers voted with their wallets and their apps and forced regulation to occur to catch up to consumer demand. And regulation was never going to get there to allow ride sharing in place, but it was demanded by consumers, and they pushed the regulators to get there. So I think that balance has to be met. I think it's not at the pace that the rest of us would want to see it happening at, but those in incumbency have a lot of power and a lot of sway. So we are getting there. To the second part of the question, are we ready? Look, yes and no. Consumers are ready for it. I think the market, everyday Australians are ready for a new kind of breadth of service that they can start tapping into. And I think we see that there's tons of data points that say that Australians are ready. I think the industry is probably not, but is rapidly getting there. And like with all these things, we'll be ready on the day that it's required, because that's when everyone gets ready.
Just give two quick perspectives. One's just a little bit of global context, and then specifically about Australia. But there's kind of two material regulatory tailwinds that are kind of forming globally. One is an increasing arc on privacy, which is driven by consumer restlessness, if you will, and you see that moving around the world. Australia's quite unique with a handful of countries. We've had privacy as a citizen right since 1988. PDPA in Singapore was 2012, GDPR 2015. The US has only just gotten, in the last 4 weeks, its first ever taste of privacy as a citizen right with CCPA in California. And so that's definitely ratcheting up, and I think they've announced they're going to do a review of our Privacy Act here to bring it into the digital era. But the other regulatory tailwind is this open data. Started with PSD2 in Europe, open banking in UK, and there's been this persistent pattern of mirror and upgrade. We mirrored and then upgraded that to the first ever economy-wide consumer data right. Singapore is now working on data portability, which is probably an upgrade on our CDR framework as well. So this more privacy and more sharing at the same time is a real challenge for regulators, for enterprises, and ultimately a brilliant combinatorial benefit for consumers to have both of those things, so empowerment and protection. At the Australian level, the Consumer Data Right Review written by Scott Farrell was some of the best work that has been done to date and remains that. Unfortunately, the translation of that to implementation handed to the ACCC in Data 61, we lost a lot in that process. So I think the best thing that's happened most recently, I think it was announced last week, Scott getting reappointed to effectively CDR 2.0 review. And I think that's a recognition that things haven't moved as fast, things have gone off the rails a little bit, we've lost something, and that we need to actually, get it back on track. So I'm really excited about the work that's going to happen with someone like Scott Farrell leading it. He is actually a world authority on this now. And I think that, I know that the public statements around right regime are, what's going to come in as well. But for me particularly, I'm excited about all the learning that's happened around consent management as a fundamental building block for a data economy. And I personally think this is going to feature as the single biggest new regulatory trend over the next 12 months.
Yeah.
Sorry, if I may, I completely agree with the point about consent frameworks. Consent frameworks are the most critical part of all of this to ensure that we actually achieve the ability to do open data, irrespective of which industry you're talking about. It just comes down to consenting as to what can be done with your data.
Consenting with a proper understanding. So, where GDPR was a massive fail, it was just one more screen that you clicked without reading on top of another screen you clicked without reading. And I would call GDPR the biggest regulatory own goal ever kicked, because all it did was entrench the market position of Google and Facebook and destroy the domestic and data economy in Europe.
So can we talk a little bit more about consent? If we, can take some key learnings about, some the fails that we've seen in other markets, what is it that we should be thinking about in terms of the framework for consent and things that we should be making sure we do get right?
Just to elaborate further to answer that question, I think the point that was made there is that we currently have uninformed consent, because you go through and you tick on that box and say, yes, okay, I agree, and submit, because you just want to get through those screens. You're doing an uninformed consent to something that can happen with your data. Whereas going through a proper consent framework where you're actually informed and understand what that means is really, really important for us going forward, and enabling us to actually get to the ability to know what we mean by privacy of our data, because we know what data we're being private about. I mean, do we really know what data we're being private about when we click accept and submit when we go to Facebook? Not too sure.
Yeah. So where have we seen that done well, or is there...
We haven't.
Right.
It hasn't happened well. So I think there are like three macro thematics that we'll see around functional consent management frameworks. One of which, actually the signal again, kind of an Australian first, the Digital Platforms Inquiry into the market power of Google and Facebook last year by the ACCC, 650-page report with 23 recommendations. The global head of privacy from Facebook flew to Australia and lobbied publicly and privately against only one of those recommendations, which was unbundling the consent for data sharing from the underlying service. So today it's bundled. You either take the service and you give away the rights, or you don't get it at all. Right. So unbundling, you can have the service, but you still need to get explicit consent for the data share, is a fundamental element, I think, to a mature consent framework. And interestingly, because that's the only one that they fought against, it's the most important one to pursue. Secondly is exactly that, this concept of simple consent. No one is going to read 8 pages of terms and conditions. Nobody, ever. History has proven that time and time again. So coming up with a standards-based approach to simple language, and so education of consumers happens through repetition of experience, is fundamental. And the benefit then is, if you do get some standards-based approach, And you can see the hints of this in what the UK's learned in their open banking review, this concept of encoded consent. Once you get to standards, you can turn that into code. Once you turn that into code, you can start to flow it through a system and get to more systematic approaches and management and verification of consent. At the moment, it's an analog world, 8 pages of terms and conditions stored inside one enterprise's database, completely disconnected from everything else. And so I think mature systems that have build on those kind of blocks are going to fundamentally transform the experience for consumers, lift domestic businesses, incumbents and attackers alike in terms of what they can do, and disempower to some degree the global digital platforms.
So I'll just preface a comment here on I am nowhere near the data expert that Danny is. I don't do it for a living. My job's much more around customer experience. That's where we live, eat and breathe. And so I probably have just much more of a pragmatic thought process around some of this stuff without the deep entrenched knowledge that someone like Danny brings. But I think there's a couple of things for me that I just think about in this space, which is everything the guys just said is right, but none of it I don't think really matters that much. Not to be disrespectful, I think it matters a lot for an ecosystem internally around governance, but from a consumer point of view, no one cares. And they won't care and they won't engage, and that's just human behaviour. Not to be sceptical, it's just processing, and whether it's you look at behavioural economy or behavioural economics, or just human behaviour naturally and the illogical nature of decision making, none of this stuff is going to make a dent on the way consumers behave. But doesn't mean the right thing shouldn't be put in place, and it becomes beholden on the industry to self-govern, because we know consumers won't engage. They won't read the terms and conditions. It doesn't matter what framework we put in place. It's all irrelevant to a consumer. Now, that's not to say that we shouldn't do some of this stuff, right? So a great example, again, might be, a parallel would be like in banking or in product, where we know consumers don't look at interest rates or fees or any of this stuff by and large. And then very few Australians could actually tell you how their interest rates are calculated and how they flow through and actually understand any of the products they use at a financial product level. And nor do they typically read any of it. But we've made sure as an industry that we've governed that in a way that experts in the field could look and compare and make decisions and provide feedback. And so I think that part is important, that those things happen, that the industry is aware of it. The industries make sure there's a governance internally around peer-led behaviour, around what's okay and what's not, because it's only going to be the industry that looks at it and cares. Consumers just won't. But the industry has a role to play right across the industry, across all data, to make sure there's this self-governance at a certain level. Because ultimately, consumers, no matter what we do, consumers will just click through anyway. And they'll click boxes or not. And none of it will make any difference to very few of them. That I'm being broad brushstroke here. There's obviously a group that will. And some people do read those terms and conditions. But I think this idea that fundamentally we need to make sure that all consumers are empowered and they know is only true to the extent that we need to have some type of self-governing behaviour systems so that experts in the field can call out when the wrong things are getting done. Yeah.
Well, can we just think for a second about the not caring versus it being too opaque, that you can, make sense of it? Because I think that the point we're making about it's 8 pages, it's too difficult. That's the part I think that consumers get into some kind of barrier with. Do we see any move towards, or who takes responsibility for making that information more easier, to digest? And is it something that you're thinking of at Wisr, or is it something that as an industry needs to be considered?
Yeah, look, I think there's a lot of ways to think about this space. Again, I think parallels are good and useful because they give us a bit of framework where other places we can understand. I think, again, banking behaviour is sort of one of them, where there's lots of governance, there's lots of regulation around the way financial products should be delivered, as an interesting parallel for what we're doing, something to do with data. What we saw through the Royal Commission is a consistent kind of view that the major companies were not living up to community expectations around the way those products were sold, delivered, or as fit for purpose. Now, after all was said and done, what actually came out of the Royal Commission, Haynes' view was, we don't need to change the regulation. The regulation said this stuff has to be fit for purpose. It has to be appropriate. It has to be, community expectations must be met. So there's no real sense of changing the regulation on the back of a absolutely abhorrent kind of Royal Commission into the practices in banking. Yet the regulation kind of said, well, the regulation's fine. It's the application of the behaviours by the industry. And I think there's an interesting lesson for data in this space. So is it going to be the regulation that brings everyone into line and makes sure? Well, absolutely it will not be. Because the regulation will do something. It'll become beholden on the leaders of the companies in the industries, across the industry, around the type of cultures they build, around customer and protection of customer and customer interests and community expectations of this space. So it'll be the real test, the litmus test will come to, are companies built in a way to think about all relevant stakeholders? Are purpose-led companies, are they going to thrive in this kind of environment where there's a sense that consumers get that certain companies are trying to put the interests of a broader group than just the shareholders in front? I think that's where I think that some of this battleground will be fought and won. And the regulation will be right. It'll be strong. It'll be the application at a behavioural level inside the cultures of the companies that deliver it.
I'm interested in your view, Graham, because you were talking about consumer behaviour often driving what organisations do. So do you think consent's going to be one of those things that as customers and consumers are looking and getting more understanding of it, that they will push companies to change the way that, for example, they're
I think those organisations that actually meet that culture of not being, there's the culture of compliance, which is complying to regulation, and there's the culture of enablement. So it's about when they start to meet the culture of enablement for the customers, then the customers will start to flock to those organisations. Because we as a society are changing our perspective from having our data bound up in those organisations to saying, no, I have more control over my data. And we've seen this in multiple industries. For instance, healthcare. Healthcare has been dealing with consent for years. When you go in and sign your piece of paper in the hospital, you're consenting to someone actually looking at your data when it's to do with you and what happens with your data as it goes on. We've seen that with the personal controlled e-health record or my health record. That document that you saw in the GP, that was a consent note. Did you opt in or did you opt out? That's consent. It's just going to be predominant across all different industries, and it's those organizations that actually enable consent and enable that culture that I think customers will flock to. Whether you're a bank, ourselves, or whether you're Google, or whether you're, Louis Vuitton, those kind of things. It's those kind of organizations that you will want to go to. And I personally would want to go to someone who enabled me to understand about data and understand about what I'm consenting.
So do you think it's going to be something then that companies could look to be creating more trust and having that as something that stands out about engaging with that business over another?
Totally.
Yeah.
Consent is about trust.
Yeah. Okay.
I might throw into the... So Anthony's absolutely right to now. Like everything he talked about around the absolutism around consumer behaviour is borne out evidentially, thoroughly to date. But we've been doing a lot of detailed research with one of our major customers across the UK, Singapore, Australian markets with both consumers and our enterprise customers. And two things have come out of that are really clear. One is if you put the right simple consent framework in front of consumers, it is what they call an awakening in terms of an understanding. Like it's a fundamentally transformational. The reaction for people in those consumer groups is, why isn't all of my data presented to me this way? So it's definitely not can't do, it's haven't done. That's one thing. The second thing I think is even more interesting, and by the way, that consumer research that we did, independently, the open bank implementation in the UK has been doing very similar almost identical piece of work with an almost identical set of results. So we know that that's going to feature in future consent models. But secondly, interesting for me is the enterprise customers that we've talked to. There are a small number who are staring down the barrel of a compliance-driven response. I'm doing this because I'm being told to. But there's a large number who don't have any compliance obligations, who want a consent management framework because they see that as empowering their businesses to pursue strategies in terms where they can honour their customer relationships. Like they actually care about... they're not in the primary business of data. If you run an airline, your primary business is not data, it's kind of trust in your entire service experience. But they want to do more with data, and so they want to be able to bring their consumers on that journey. So I'm really hopeful that there's both a model that works for consumers, and that there's a natural incentive for most enterprises, to want to do the right thing. And I think between those two things, an interplay between a sensible regulatory framework could be transformational.
It's interesting. We could have quite an interesting debate around what's likely to happen in this space. I think you make a really solid point around it. Actually is what's happened to now, and will behaviours change? I think, changing behaviour is almost the hardest thing you can possibly try to do. Again, a lot of the behavioural economic theory talks to the ways you try to change behaviour. Information in and by itself is a really poor way to change behaviour. It basically doesn't work. It works for a very small set of people. If you're a data scientist, actually information probably changes your behaviour. And there's a whole bunch of accountants, maybe I'm being a bit general, but there are people who do generally make changes to their behaviour based on information. That's why budgeting tools don't typically work for most people, because just presenting someone the information doesn't actually change their spending behaviour or saving behaviour after that. And so you absolutely can. There are these awakening moments. And so if you provide the right information just at the point of decision making, that's really critical. So that's the time when it can change behaviour. So I'm about to make a decision. Show me some information which is relevant to this decision right now, or actually even irrelevant. Some great studies around showing the irrelevancy. Spin a roulette wheel and show me a number before I make a decision. That will influence the decision that I make, even though that number is completely unrelated to my decision. There's tons of examples like that. So a bit of information before a decision can hugely influence that decision. That being said, outside of that, it makes little impact. So, in terms of a great awakening moment, Facebook, Cambridge Analytica, there was a huge awakening moment right across mass media for all consumers around, whoa, that's really bad. That's pretty shit behaviour. No one kind of accepts that. And guess what happened? Nothing. Great awakening moment, and then everyone just kept doing what they were doing the day after. Some people went and deleted their Facebook accounts. It was like 0.01% impact of people went, oh, that's really bad. They've been abusing my data. I'm out of here. Most people just went, cool. And the next app that opened up and said, do you want to log in with Facebook? Everyone went, yep, because I want to get this cool app that allows me to shoot missiles at something, right? And away they went. So it doesn't really change behaviour. This is where I'm a bit more sceptical around this stuff, but I think that's where it becomes so much more beholden again on the companies, on the interests of the cultures inside companies, leaders inside companies, and experts in the domain, people like Danny, to hold everyone else to account for the way these things are done.
I think that's a really good point, and the way I've thought about that in the past is that currently humans are very experience-based decision makers. So based on their experience, they're going to make the decisions, whereas what we're transitioning to is data-based decision-making, which is kind of alien to us in some ways until we get down to a particular point. And if we can give great experiences, then we're going to go, hey, yeah, we go with that. Submit.
I think so, but I think, again, the providing thesis that I use to inform a lot of my thinking in this space is the behavioural economic world, which is founded on the premise of them realising human beings behave irrationally and illogically when it comes to decision-making.
Really?
So the idea that we create logical pathways for people around data consent, around anything, around product, is a fallacy in and of itself. To say, well, it has to be a logical, clear decision so everyone gets it and they can make the logical decision. People will not make the logical decision. That's what we know, proven out evidentiary over and over again.
I think that does bring us to talking about trust, because you mentioned trust. How are these newer companies, especially with open banking, neobanks, going about, you think, building trust when they don't have that long experience or the 100 years of a brand behind them to be able to lean on? What sort of things are businesses thinking, like with Wisr and Judo Bank, in terms of building that trust with the consumer?
I think the trust is an interesting one. You get what you pay for when it comes to research. Again, I feel like I'm being very cynical up here today. It's not much. I'm typically an optimist, but I also know that you can get research to show you and prove you anything you want, right? And we all know that as being good citizens and intellectuals. I think that the banks will overplay the importance of trust because it suits their narrative. Again, I think evidentially we see that actually trust is less of an issue. I think a great example right now, the particular thing we're talking about, in our little domain, which is open banking and access to your own data in banking, we've already seen mass adoption of really crap technology, which is really unsecure. So, by my estimation, there's between 2 and 3 million people in Australia who've signed up for screen scraping technology, where you've got to actually enter in your banking username and password to a brand you've probably never heard of before. And that's mass adoption on technology, which is awful and really unsafe in some ways. Not categorically unsafe, it's relatively safe, and we haven't had any, unsafe by the standards of a regulator, right? And when we look at kind of what's the best outcome here, that's not the technology we should be relying on. But turns out it's actually safe enough. What we've seen is actually no big mishaps from this so-called bad technology. We've seen mass consumer adoption of it going outside what their banks are telling them to do. CBA literally went out and said, don't use this technology to their 16 million customers. And yet hundreds of thousands of them continue to do so. So again, I think this idea of the trust gets a bit overplayed. I think consumers want a service and they want an outcome, and they make decisions much more around the thing they want to get at, the gratification of the thing they now want to do, much more than the overall trust. Now, that being said, I think the idea that banks can transform themselves into the banks of data and having this trust position as guardians of our data, which is sort of one of the ways I think they're starting to position themselves. In the way we trust them with our money, we might trust them with our data, and maybe they can control the access to that. That would be a great position for the banks to find themselves in. And they will try and lever that trust signal that they have around money into that, I think. But again, I think there's just so many examples, whether it's the Facebooks or the Googles or the others, that the consumers don't potentially care as much about this as people think. And therefore, again, the industry's got to get it right.
Well, we had quite a lot of discussions about trust. Being a new brand in the market and becoming a new bank, everyone looked at us and went, hey, who's that Judo? Why are you called Judo? You're a new bank. So building the trust in our market was actually quite key to us. But that actually came through the fact that we're a relationship-focused bank. So we have our people going and talking to our customers, the small, medium enterprise business partners. So we build trust in our brand in that way. So that was our trust conversation. Trust in us as guardians. I like the word guardian, being a complete techie geek kind of person. But I also prefer the word custodian because it comes more down to really where we are in terms of where we're going in the future. And when we were thinking about Judo and going through understanding what we would want to do from a technology and architecture point of view, because that's really my domain, I think one of the first questions I asked was, so what do we do about consent and how do we manage trust? And that's been weaved into our DNA in what we're going. And that's the advantage that the new organizations have, is the fact that they can weave these things into what they do, rather than the older organizations that actually still have this corporate boundary concepts or even country boundary concepts that sit in there, as in the government having a boundary in terms of the sharing of data between Singapore and Australia. And we have that opportunity to actually look at those boundaries and say, how could we actually make them permeable enough to support open data and support this whole new digital economy? And we've been thinking that through since the very beginning of what we do, so that we can embody trust.
I think I definitely want to give Danny a chance to talk about trust because he knows a lot about this space. I think the one, just to, I didn't answer the question around what Wisr doing, I guess. It's similar to, I think, Judo. Our belief is that you build a purpose-led company, and that permeates through everything that you do. And purpose-led companies outperform in terms of total shareholder return, somewhere between 5 and 10x. And there's lots of research that shows why that outcome. My own personal thesis around why that is, I think if you get purpose right, it means your employees know why they turn up to work every day. That there's a meaning behind their work, which isn't I've got to maximise some profit here. That they actually get you're trying as a business, as a group of people, to deliver something. For us, in our case, it's financial wellness for Australians. But if your employees get that fundamentally, they make decisions every day based on that. And they can really lean into what you're trying to do as a company, and they make the right decisions. Your customers can then see through what you do to feel that vision. They become advocates for you. And the thing we know about purpose is that you can't retrofit purpose. It's very hard to go back and try and retro purpose through an organisation. And that's one of the advantages I think some of the challenges have, that when you can start a business in the right way, focus on the right things, then that behaviour can become part of your DNA.
Danny?
I think there are, you framed the question particularly in reference to like new digital organisations, neobanks, etc. I think there are two things that really go to trust. My observation more broadly, even outside of neobanking, is that a high fidelity digital experience rapidly engenders trust. And that's something that we've been conditioned collectively to experience. You know, back in 1999, it would have been don't talk to strangers on the internet. And today it's literally summon a stranger to your home to pick you up, or let a stranger into your house to stay while you're away for the weekend. And that's an outcome that's a function of trust in the digital experience that's been managed. So I think a high quality digital experience launched in the market, even just the neobank numbers in our market demonstrate there's a real willingness to go there. Once you've kind of got that taste, then it's about the transparency and consistency of experience, brand, communication, etc., where trust gets built upon. But certainly the shift to digital economy, trust seems to be, there's a willingness to trust quite quickly. Having said that, you know, a lot of the research talks about there's still this very strong trust mechanism around data, even more so than money, with banks, probably because they haven't really had a major spill. You know, I think if there's, and it's probably even the risk in the fintech community under open banking, is if there's a fintech that goes and spills a lot of data that's collected from banks under CDR, you can bet that's going to be a topic that they play up and said, we've never done that and you have. So I think that the quality of that digital experience is really key.
Yeah.
I think I mean, one of the comments you made just then is kind of maybe a semantic thing, but the data collected by banks, data's not actually collected by banks. The data primarily is collected by 2 million small businesses in Australia where people go and transact, and there's actually a different point. The banks receive that data, but the banks often tell the story that we collect this data and we're the ones who have done it. Actually, that's not entirely true. The banks have been the ones hoovering it up from everyone else who've been creating this value and then sitting and storing on it. And you know, that analogy around the trust, I think it's the first time I've kind of tied this connection together around this kind of strangers idea. It's such a great analogy because we have the incumbents today sitting in Australia going, don't trust strangers into your home. Don't trust strangers don't get in the car with a stranger. That's literally what they're saying about this data. And we've got consumers saying, no, I want someone to come pick me up. I want someone to come stay in my house when I'm away.
I don't think consumers want their data transferred at all. I just think all consumers want is an outcome. If they could get the same outcome without the data leaving a bank that spends $100 million a year on cybersecurity, and it was that clearly communicated and that easy for them, I reckon they'd choose that. Like, there's no consumer that says, I want this body of data to move from there to there. Not one consumer. They say, I want a loan and you've got my credit information, or I want to see my spend patterns in this visualization and you have the data. No consumer cares about data moving. That's an industry issue.
Yeah, agree. Okay, well, just before I pass it over to questions, so please think about some that you have. I just wanted to wrap up by asking you each, you know, the open data has been in play in the UK for the last couple of years. So just asking for observations or any key learnings you think we should take on as we look to the experiences that they've had or other jurisdictions in the last couple of years as we look to move into this new era.
I think that the UK went too narrow and too deep. That was I think that they'd probably self-reflect on that as well. So, you know, I think they looked at CDR with some chagrin and were like, that's actually not a bad idea, Australia. And they're now trying to retrofit the smarter data policy around something. But because they went so deep, centralised entity, open bank implementation, very, very defined standards, I think they ended up with something quite narrow. I think this is an iterative process, so I think they're learning from that. And as I said, every other market's learning. I think what Singapore's working on is phenomenal. And just to kind of frame the simple difference there, our CDR is a pool regime. It's run by a competition regulator, and it's primarily about attackers pulling on incumbent data. That's it. That's all they care about. Singapore thinks about data in terms of pull and push, in terms of data sharing and consent, which is, yes, we enable competitors to pull on incumbents, but we also enable incumbents to strike data sharing arrangements and ask their own customers, are you okay with this? And it turns out that the use case range when you incorporate push and pull is about 6 or 7 times greater than what there is under a pure competition lens. So again, my problem with the ACCC taking Scott Farrell's great thinking is when you're a hammer, everything looks like a nail. And so if you only look at things through a competition lens, you miss the mark. So I think data portability will be the new high watermark, and it'll continue to iterate again.
Yeah, great point.
I love the idea of a push me, pull you strategy. That really does resonate really well with where I think things should be. The fact of standardization of standards basically is the heart of all of this, and the fact that we have a countrywide, industry-wide, global-wide standard for us to adhere to is actually key. If you have something where you say, oh, it's a standard and we have many standards, and you don't adhere or you extend, you break the whole thing. So I come from an enterprise architecture background, if any of you know what that means, so you always go on about the fact it's standards-based, because you basically want to achieve syntactic and semantic interoperability, because this is what it's really all about. So standardization to enable open data so that we can get to a push me, pull you strategy is a great objective.
Yeah, I mean, I think, at the end of the day, and it's a good analogy, it's probably like blockchain, where, all the hype, all the conversation, Long Island iced tea blockchain, all that kind of stuff, and all the impact it all had. At the end of the day, the blockchain is just an enabler. It ends up being the rails. And so the cool thing about blockchain is that it's these rails that lots of other cool things can get built on, and this will be the same if we get it right. It's less interesting in and of itself, other than that it becomes a rails that then some really cool stuff can get done. I think we do need a bit of we do need a bit of a hammer to the nail of competition in banking in Australia. It's demonstrably not working. There hasn't been competition. So we're solving a particular problem at the moment. It's probably not a broad enough problem to be solving, but at least we're trying to solve that problem. That's a good start. CBA came out this week and talked about the fact, it looks like this world's changing now, and all these fintechs are going to get access and data, and we'll just go and build 25 of them ourselves, which we'll own fully as a response to this kind of changing dynamic, which I think is very telling to kind of the what's likely to be happening over the next couple of years. But I think the exciting thing is the rails here. Once the rails are in place, they become much less exciting once they're established, and then the future of what gets built on top of these rails and the services that consumers can get access to, the personalisation of service, the niche provision of services, particular community groups that can be very narrow, which currently we don't really have rails to deliver, becomes really exciting to really benefit Australia.
Right.
Just as a final point there, I actually think under the current construct of CDRs as being implemented by the ACCC, there's a very real scenario that they actually preside over a regime that entrenches the competitive advantage of banks, which I think will be terribly, sadly hilarious.
A bit like that own goal you talked about in the UK. It has the danger signs of some of that too.
Absolutely, which is why I think having Scott reappointed last week is just, we can't underestimate how important that is.